is that U.S. stock market going down, which could be led by Bitcoin, and it will just accelerate a pre-existing trend. That's gold beating the stock market. So to me, I'm still sticking in, and that to me is why I put 4,000 in my headline this year. That's a scenario. Everybody tells you it's in for the long haul as long as it keeps going up. Just to have a little pushback on that, and that to me accelerates gold to the next key round. I mean, right now it's still $3,000, but if you have a little bit of a bear market in equities that stays down for a while, which means deflation, significant deflation, that gets gold towards 4,000.
Gold surged to all-time highs in 2024. Reaching a record $2,790 per ounce in October, with strong demand expected to persist into next year. This demand is driven by geopolitical risks, central bank purchases, and the U.S. Federal Reserve's rate cut cycle, reinforcing gold's status as a primary safe haven asset. Gold broke records 40 times throughout the year, with total gold demand surpassing $100 billion for the first time in Q3 of 2024. Mike McGlone, senior commodity strategist at Bloomberg Intelligence, discussed the outlook for commodities in 2025. While acknowledging that some of his previous predictions have been incorrect, McGlone remains confident that gold will ultimately reach its key price targets. He believes that if deflation persists and the equity bear market continues, gold could rise to $4,000. Following a stellar 26% return in 2023, the S&P 500 is on track to deliver over 25% again in 2024, with just 6 trading days remaining. After 2 back-to-back blockbuster years, investors are understandably asking, will 2025 mark the end of the rally? Could the market crash, or will the good times continue? Since 1926, the S&P 500 has experienced 2 consecutive years of 20% plus returns only 11 times, raising the question of whether this exceptional performance can persist into 2025. Currently, gold is up about 26% for the year, while the total return for the S&P 500 stands at 25%. McGlone highlights that when gold outperforms stocks, it signals an unfavorable sign for the global economy. He expresses concern that this trend of gold surpassing the stock market could accelerate in the coming year. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads.
Gold outperforming virtually all commodities, particularly the S&P 500. As we speak right now, gold's up about 26% in the year. The total return for the S&P 500 is 25%, but you're not really hearing that so much in the public, on CNBC and in the broadcast media. You're hearing, how great AI-driven stock market is, but when the rock beats stocks, that's not a good sign for the global economy. And I'm fearful that this process of the stock of gold beating the stock market will accelerate next year, particularly if digital gold has a bit more of a backup. In a year like this, when we've had U.S. interest yields are still high, the stock market's on a tear, and the most significant competitor for gold, Bitcoin, is just taken off, that gold still outperforms the S&P 500. To me, it's a good sign of continuing strength for gold. And gold's had a decent pullback. It's dropped about 10% from its peak. So I think the key detriment and key point looking for gold next year, a key thing that will accelerate is for gold next year is if Bitcoin backs off a little bit, maybe continues to back off from this threshold at 100,000, significant resistance, and makes all those ETF buyers realize that they're the high speculative digital asset, and what they've been telling me that it just goes up, might not, will make it tilt back towards gold. And we're seeing that uptick in gold ETFs. We're going to have the first up year in gold ETFs in 5. And the key thing, I think, for all that is Bitcoin going down, the U.S. stock market pulling back a little bit means there'll be a lot more interest in gold. I'm repeating what I said at the beginning of last year and the year before and the year before. So I have to admit, first thing I have to do is admit where I'm wrong, and I got a lot more wrong I can admit, but I'd rather not admit them all right now, is to me, gold is just a matter of time. It gets to that threshold. It's not so much a target, it's just a matter of time. And a key thing let's talk about the key risk is Mr. Z picking up the phone and ends the Cold War right now and says, I'm done with Russia. They can go on their own. Forget helping this war. Forget supporting these other antagonists. I'm going to tilt over to Donald Trump and be his best friend. Now that, at the end of that, and keep the stock market strong and interest rates high, that would be a headwind for gold. So let's look at the opposite. More of the same. And by more of the same, we still haven't had that elusive stock market correction. So me, the next big catalyst to get gold really to take off, I should say, some normalization in the equity market, which used to be normal, meaning, we can't just make record highs for year and year and year and get this expensive with it, expect it to continue. So the biggest, I think, thing for the gold to really accelerate, to have those ETF flows continue, to have a first year inflow in a while is that U.S. stock market going down, which could be led by Bitcoin, and it will just accelerate a pre-existing trend. That's gold beating the stock market. So to me, I'm still sticking in, and that to me is why I put 4,000 in my headline this year. That's a scenario. Let's just look at a normal potential bear market in stock market. How you define that? Maybe drops 20% and stays down for a while. Stuff that used to be normal. That to me initially would be a little pressure factor on gold, like it was in 2008, but that would set the foundation for lower yields and for the world, and just have a little bit of disdain in this rapidly advancing stock market price. Just a little give up. I mean, we always have them, when people just, everybody tells you it's in for the long haul as long as it keeps going up. Just to have a little pushback on that, and that to me accelerates gold to the next key round. I mean, right now it's still $3,000. But if you have a little bit of a bear market in equities that stays down for a while, which means deflation, significant deflation, that gets gold towards 4,000.
U.S. investors are preparing for a range of market-impacting changes in 2025, including new tariffs, deregulation, and tax policies, as Donald Trump returns to the White House in January. After aggressive rate cuts in September and November, the Federal Reserve continued its easing in December but signaled that fewer reductions are expected in 2025. Meanwhile, gold prices rose on Thursday in light holiday trading as markets await further indications on the Federal Reserve's 2025 rate strategy and potential tariff policies under the incoming Trump administration. As for the markets, McGlone sees an excellent trading year ahead, particularly for gold, though he notes that silver may not perform as well due to its closer correlation to copper. Regarding commodities, he mentions that the Bloomberg Commodity Index is hovering at the same price it hit in 2011 after the financial crisis. Now let's redirect our attention to a video.
The bottom line is tariffs are way overdue. They are going to happen. They're going to be disrupting. They're going to pressure the rest of the world. Most of the major exporters, China, it's about 20% of GDP. For most of Europe, it's closer to 25% of GDP is exports. And I think with U.S. and Canada, it'll be worked out because that's a great trading relationship we all want to keep. And this block of U.S. and Canada is just a wonderful, safe situation. Let's keep us cozied up, but maybe just a little bit of Trump pushback, and maybe in negotiation. But with China, definitely. With Europe, the key thing to point out from that book is things I remember reading about decades ago. Is it's just not fair that France can charge 26% tariffs on French and on U.S. wine, and U.S. basically doesn't charge anything. That's just silly. It's about to change. Sorry, we got to straighten this out. And another thing that's really silly is the U.S. charging 3% tariffs on automotive part imports, and most other countries charging 10% on U.S. It's just silly. That's going to change. Mm-hmm. It's going to at least get hit, and we're going to test it. It's one of those things we're going to see the test. And the key thing about it, remember, is Trump has a complete mandate. He won. I mean, it might not be a great majority, but he won the election. Obviously, he has a Senate, he has a House, and he has the Supreme Court. I mean, if there's going to be a person coming out swinging, he's not getting younger. He's got 2 years more midterms. He's going to come out swinging for homers right away. If you disagree with that, well, good luck. I mean, just everything that General McMaster pointed out in his book, At War with Ourselves, Trump is doing. He said if he got elected, he's going to get nothing, completely focused on loyalty. People are loyal to him and do what he wants. So that's going to happen. It's going to happen hard. And I think it's a sign that we should expect. Here's the bottom line. The U.S. is a major excess, just the U.S. alone has a major surplus of, I mentioned earlier, crude oil, grains. And so if there's retaliation, of course, that's going to bottleneck prices. You've already seen that happen in crude. It's happened in soybeans, potentially corn. And it's probably going to spark at least the first 10% correction in the stock market we've had in a long time. And if I was Trump, he knows it's overdue. Get it over with early so he can get through midterms and get that over with. So the bottom line is it's going to be a great trading year. I think it's going to be a very good year for gold. And one thing that's probably not going to be as good for silver to see. I'll end with this. The Bloomberg Commodity Index right now is hovering the spot index. It's the same price from when it peaked in 2011. That was the bounce after the financial crisis. It made that big pump in 2022 on the back of mostly artificial things. And the lessons that commodities are when they pump, they almost always get cheap. So it's been hovering this very narrow range. And I think it's on the cusp of breaking down, particularly if the U.S. stock market breaks down or has a little bit of a correction. And now we have so much enthusiasm for earnings that even our chief equity strategist, Gina Martin Adams, who's been spot on, most notably the last 2 years, points out the market's just way too priced for too much enthusiasm, too much earnings next year, and it's just too excessive, and that we should see a little bit more of a rational pullback.
Gold is on track for its best annual performance in over a decade, with the yellow metal up 28% through November, as the World Gold Council reported. The Federal Reserve's shift toward a rate-cutting cycle has increased the appeal of safe haven assets like gold. Geopolitical risks in the Middle East and the upcoming U.S. presidential election have further fueled demand for gold as a safe haven. Market participants remain optimistic, with some predicting that gold prices could exceed $3,000 per ounce. What factors could push gold prices past $3,000 per ounce, and how likely is this scenario? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.